Hello deep dive investors and welcome back to the channel. Pull up a chair by the fire. Today we're exploring one of 2025's most heated stock debates. Is Apple or Nvidia the true king of artificial intelligence? Let's dig in, not just into headlines, but what's really driving growth, innovation, and future wins in AI. Let's start with Apple. Apple has built its empire around making technology simple, secure, and personal. With the rollout of Apple Intelligence, AI features embedded into iPhones, Macs, and iPads, Apple aims to bring advanced capabilities right into your hands. This year, we saw new features: smarter Siri, on-device writing assistance, private image editing, advanced live translation, and tools that keep your data private and offline. Their on-device approach means less dependence on big cloud servers, which is huge for privacy-focused users and developers. A major headline from 2025: Apple deepened partnerships with Google and Anthropic, integrating Google Gemini AI to level up Siri's search and summarization power, all within Apple's private cloud. That means answers, translations, and recommendations get smarter, and your data stays yours, not mined for advertising. Apple even gave developers access to its on-device AI foundation model, opening the door for more intelligent apps, even offline. But let's talk chips. Apple's M series, especially the new M4, brings a vastly upgraded neural engine, making real-time AI processing possible for millions of devices. These chips are optimized for things like image analysis, natural language processing, and even running local models for customized tasks. Apple's secret sauce is vertical integration, from chip to software to retail. Where's the downside? Apple's AI is still rolling out, and most features require bleeding-edge hardware. Siri's improvement is real, but as many reviewers note, it's still not groundbreaking compared to what Google or ChatGPT can already do. Also, the pace is cautious. Apple rarely releases true beta features and prefers slow, stable rollouts. Now, let's open the Nvidia chapter. If there's one company everyone associates with AI infrastructure, it's Nvidia. Nvidia doesn't sell consumer devices. It sells the picks and shovels for the AI gold rush: GPUs, data center systems, and developer platforms. These are the chips that train massive language models, run AI apps in the cloud, and power everything from autonomous vehicles to cutting-edge medical research. Nvidia's business has grown so fast, it briefly eclipsed Apple's market cap in 2025, hitting the $4 trillion mark, unprecedented for a chipmaker. Nvidia's quarterly revenue soared to an eye-popping $46.7 billion this summer, up 56% year-on-year. More than 88% of that comes from the data center, where Amazon, Microsoft, Google, and Meta are locked in a race to build the largest AI factories on Earth. CEO Jensen Huang recently said the world is set for a $3 to $4 trillion AI infrastructure build-out before the decade's end, and Nvidia is capturing a stunning 70% of that spend at current ratios. On the tech side, Nvidia's Blackwell GPU platform, H200 systems, and AI software frameworks dominate in speed, versatility, and developer mindshare. Their chips are literally sold out a year ahead thanks to demand from hyperscaler cloud providers, and the pipeline for enterprise and governments buying in has never been stronger. However, Nvidia isn't immune to business risk. Over half of their data center revenue comes from just 3 customers. If Amazon, Google, or even Apple decide to switch to an alternative, competition and margins could shift. Also, Nvidia's hardware is priced at a premium. As the market matures, rivals like AMD, Intel, and new AI chip startups, even Apple itself, could put pressure on future profits. Let's compare the financials for the context. Apple's revenue is massive, topping $400 billion annually, and its market cap remains just shy of $4 trillion. Apple's net income last year exceeded $120 billion, with margins around 25 to 30%, a testament to scale and global reach. The company continues to reward shareholders with consistent buybacks and dividends. Apple's R&D spending also hit record highs this year, focusing heavily on AI, custom silicon, and developer tools. Nvidia's scale is a step change smaller, but its growth rate is explosive. In 2025, Nvidia reported revenue over $88 billion, up 44% year over year, with data center profits growing at more than 100% annually. Their operating margins now regularly exceed 70%, with net income over $40 billion, unmatched for a hardware platform company. Nvidia's return on equity sits above 65%, making it one of the most profitable in the S&P 500. R&D spending is rising sharply, with $10.5 billion invested in AI and autonomous platforms, all aimed at keeping Nvidia in the lead. Now, let's step back. What does this mean for you as an investor? Apple is positioning itself as the consumer AI king, bringing private, personalized AI to billions of devices. The company thrives on ecosystem loyalty, privacy, and premium branding. Its hardware-driven AI approach means once you're inside Apple's world, your experience becomes smoother and more valuable with each upgrade. Apple also has the flexibility to partner with giants like Google and Anthropic, instantly raising its AI prowess. Nvidia is the infrastructure king, powering the backbone of AI for everyone, not just consumers. Cloud providers, universities, enterprises, and governments all rely on Nvidia for scaling up their ambitions. For investors, Nvidia is the bet if you believe the world is at the start of a $1 trillion AI arms race, and if hyperscalers remain loyal to the best technology. In summary, Apple's strength is its unrivaled reach and sticky consumer base, while Nvidia's is its ability to dominate the most advanced layer of the global AI stack. So, deep dive investors, what's your call? Do you prefer Apple's slow burn of innovation, privacy, and daily life applications, or Nvidia's rocket-fueled ride into the infrastructure future? Is one king for now, and could that change as the technology matures? Let's talk in the comments. As always, this breakdown is for education, not advice. Be sure to do your research and talk to a licensed advisor before making investing decisions. Stay curious, stay smart, and I'll see you next time by the fire for our next deep dive.